And Fed Chair Jay Powell is beginning 2 days of Capitol Hill testimony. That's today, addressing the economy and Fed policy. He's going to speak to the Senate Banking Committee at 10 a.m. Eastern. His appearance comes a day after the Fed announced it would start buying individual corporate bonds for the first time ever. Steve Liesman joins us now with more on that unprecedented move and what to expect today. It was ETS before, Steve, so drill down on how this actually would affect things in a substantial way, a different way than what we already knew the Fed was doing.
You know, Joe, it's not really anything new. There's a certain breathlessness to the reporting yesterday that I don't think was necessarily warranted. The Fed simply announced how it was doing it. But look, Powell comes with a two-part message to Congress. He's dovish on policy, but bearish on the outlook. And, of course, those two things go together. Let me go through the three things that Powell's likely to say today first. One is the outlook is uncertain, the downturn is severe, and its effects could be felt for a long time to come. Two, the Fed's going to do whatever it takes to combat the virus, the effects of the virus, including things like buying corporate bonds. Three, the Fed can't do it alone. It's going to require help from Congress. Powell comes to Congress having opened Main Street and, as Joe just said, announcing that would begin the corporate bond buying program that it already announced in the secondary market. It said it was going to do this, but the announcement did help turn around stocks. Even though it represents no new money, the Fed simply announced it would be doing what it said it was going to do, but doing so according to an index. So it's going to be maybe broader based than people expected. All right. Now you got retail sales coming in. It's going to show the first signs of reopening. Up 8% is the expectation compared to a 16% decline. But you'll do a little bit worse when you take out autos, which apparently have done well. Also, gasoline station sales should rebound. I'll be looking for whether or not consumers have done discretionary spending in like sporting goods and hobbies and clothing, things that maybe they had put off, and see if there's any rebound in that. Finally, Goldman Sachs out with a report yesterday that was pretty downbeat on the consumer and the economy, suggesting wider unemployment that wasn't picked up in the May report, and saying, quote, the bad news is that disposable income falls significantly in 2021 under our forecast. Consumer spending could therefore pose a significant risk to the budding recovery in the quarters following the election. And my guess is that Powell embraces, if not this particular forecast, then the risk embedded in this forecast. He's all about uncertainty, and he's going to say the spigot is wide open to address it. So, Joe, just another answer to your question. I don't see, there was no new money as part of it. It was simply how they're going to do it. And sometimes the market just likes it when the Fed follows through and announces it's going to start today buying the bonds that it said it was going to buy.